Most people treat their KiwiSaver the way they treat an old photo album. They know it exists, they know it matters, they never bother to open it. And that small act of neglect can cost them more than they realize. If you're giving us a checklist for 2026, what are the 3 to 4 big macro trends that you're looking at? And what is the most misunderstood risk that we're not considering?
Well, if we're trying to get a gauge on, look, is the economy picking up or not as we're heading into next year, which is sort of really it's those signs of that turning point to give people confidence that the economy is going to pick up, and that will filter through into confidence around equity markets, also influence those expectations of lower interest rates. So, what are some things to look for? Particularly over the next few months? We're going to get the GDP figures out just before Christmas, so that'll be the key thing to watch out for. That's for the third quarter, so the 3 months of September. Now, when you're eyeing down the barrel of have you done enough Christmas shopping, by the time this data comes out, that feels ancient. But what we're looking for is at least some confirmation that wider economic activity did actually start picking up after that shocker decline in GDP over the June quarter. So that's a big one. Labour market data too. So we get quarterly updates on what's happening with employment and unemployment and wages. We're not getting one until early February now, but we do get some month-by-month job figures. So look, just seeing that labour market pick up, that's a good sign that the economy is turning the corner, because normally you don't really see strong growth in hiring until businesses have got confident that they need those people on a sustained basis. Like if you see a bounce or two up in your sales for a couple of months, well, that's great, but you'll still be worrying for a bit about, okay, is that just a flash in the pan rather than just the start of something big and beautiful? So businesses tend to sort of defer and hire when they've got that confidence that whatever they are doing is going to get sustained and mean that those people are going to be gainfully filled with work. So that's a really important thing to watch for. It's just that it's it follows everything else as well. So that's the challenge. It's not necessarily a good early indicator, but it's a good sort of reinforcing indicator as well. I think the other thing is just our trade as well. At the moment, it looks like things have been fairly resilient, but we have been probably overly reliant on the earnings of trade to just sort of prop the economy up recently, whilst interest rates have been high and households put their wallet away in the safe and forgot the combination. So look, just seeing our export prices do reasonably well and our trade hold-ups, an important thing at the moment as well, just for helping provide a bit of extra traction going forward.